if you are in the anti-money laundering space, and unless and until you've been living under a rock, you've probably heard about the giant $3.1 billion anti-money laundering fine and penalty on TD Bank here in the US. And the 99-page document, which is on the FinCEN website, which covers the facts, the figures, the justifications, the investigation that sort of went on to in the run-up to this particular penalty and this action, is very instructional. But I'm not really here to talk about that. I'm here to talk about what financial institutions and fintechs and banks and even regulators can learn from this entire event, and what this possibly points towards as far as trends are concerned in the world of AML. So here are my top 5 learnings from the entire TD Bank anti-money laundering penalty event. Number 1, individuals probably will face charges. Now, we've already seen that in the US, that when it came to Binance and when it came to FTX, the senior most folks faced criminal charges and jail time. But banks and banking executives have usually sort of not been charged till date for AML non-compliance. The DOJ, the Department of Justice, has kept that option open in the case of TD Bank. Now, I do want to point out that nobody really has been charged at the individual level. Yes, there has been some shake-up as far as the senior ranks are concerned, but it could happen. And that would open up a real floodgate of possibilities when it comes to individuals getting charged for criminality, for their actions and criminality. So that's number 1. Number 2 is, when you look at the entire investigation, the real focus has not been on tax evasion and the fact that the bank enabled tax evaders. They are more concerned about criminal rings and money laundering that helped in terrorist financing and drugs and high-risk entities and others. So they're more focused on the anti-social and destabilization impact that these financial institutions and their channels can enable. And that continues to be a big focus. That's very instructional for financial institutions and fintechs and payment providers across the world, because many of these are enabled not by very large players in many cases or by very large transactions, but even small ticket sizes that need to be looked at. Number 3 is, the regulator has gone into the minutiae of the transaction monitoring system and have pointed out facts like the transaction monitoring system really wasn't applied in over $18 trillion worth of transactions, that the scenarios weren't updated, the rules weren't updated, the thresholds were not aligned to the new reality of doing business, even though TD Bank did very, very well. And so expect regulators to now go down to the specifics and details of your transaction monitoring, AML, screening, record keeping, customer risk rating and other systems, and the justifications that you applied there. Number 4 is, the regulator clearly pointed out that not enough resources and money and people were added to the AML program to make it effective, though the bank continued to do very well. And so the regulators clearly pointed out that though you may be putting in a few $100 million on people and processes, but it was not enough to manage the volume and the complexity and the type of business that you're doing. And therefore, spends have to be commensurate to the complexity and type of business and value and volume of business that you do. That was very interesting. And number 5 is, with this particular action, the regulator has capped the growth of TD Bank. They cannot grow beyond a certain level and amount for the next few years till they comply and they're able to remediate all the issues that they're facing. This is very interesting because really, if you were to think about the average financial institution, if it has growth capital or private capital or public capital, that effectively means it can no longer grow. It's a sitting duck, and what that means is your competitors will take you over, your investors will flee, your partners will flee, and it just means that status quo or staying as is would almost be a death knell for the average financial institution if this action were to be applied on them. And those are my top 5 things I've learned from this entire event and from my research. I will put a link in the description below for the document of the FinCEN case, the 99-page case, and I look forward to hearing from you. Take care.